Imagine your retirement savings being managed by a trustee that falls short on critical investment practices. That's the alarming situation Equity Trustees Superannuation Limited, ETSL, finds itself in, prompting Australia's financial watchdog to step in. The Australian Prudential Regulation Authority, APRA, has slapped ETSL with additional license conditions, exposing concerns about how this major player handles its investment governance. This move comes after APRA's recent deep dive into how superannuation trustees, particularly those offering investment platforms, manage member funds. ETSL, responsible for overseeing 11 superannuation funds with a staggering 649,000 member accounts and over $37 billion in assets, has been found lacking in several key areas. APRA's review uncovered weaknesses in how ETSL brings new investment options on board, assesses their suitability for members, and manages potential conflicts of interest. But here's where it gets controversial. APRA's findings suggest ETSL may not have been doing enough to ensure new investments are thoroughly vetted, consistently evaluated, and truly in the best financial interests of its members. This raises questions about the level of due diligence being conducted and the robustness of their risk management processes. The regulator identified specific concerns, including inconsistent onboarding. New investment options weren't being assessed uniformly, potentially leaving members exposed to unsuitable choices. Insufficient due diligence. APRA questioned whether ETSL was digging deep enough into the risks and potential rewards of new investments. Lack of independent analysis. The reliance on information from investment managers and external agencies without sufficient independent scrutiny was flagged as a red flag. Weak monitoring and reporting. APRA found ETSL systems for tracking and managing higher-risk investments needed significant improvement. To address these issues, APRA has mandated ETSL to take decisive action. Starting December 18, 2025, ETSL must bring in the experts. An independent reviewer will scrutinize their investment offerings and governance framework, ensuring an unbiased assessment. Fix the flaws. ETSL needs to develop and implement a comprehensive plan to address the identified gaps and prove to APRA that they've taken effective corrective measures. Reevaluate everything. Every investment option on their platform will be re-examined against stricter governance standards to ensure ongoing suitability for members. And this is the part most people miss. ETSL is now barred from adding certain high-risk investments until an independent expert gives the green light and a senior executive personally attests to the option's alignment with members' best interests. These measures build upon APRA's public call in October 2025 for platform trustees to significantly strengthen their investment governance practices. Deputy Chair Margaret Cole emphasized, robust investment governance, especially in onboarding and monitoring, is non-negotiable for protecting members' hard-earned savings. Trustees cannot delegate their accountability, regardless of their business model. APRA's actions send a clear message. The bar for investment governance in the superannuation industry is rising. The regulator will continue to work closely with ASIC to address any weaknesses identified in platform trustees. This situation raises important questions for all superannuation members. How well do you understand your fund's investment strategy? Are you confident your trustee is prioritizing your financial well-being? Let's continue the conversation in the comments. What are your thoughts on APRA's intervention and the state of investment governance in the superannuation industry?